It's 6 o'clock in London, it's 1 p.m. in New York, it's 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings. Good morning, good afternoon, or good evening, depending on where you are in the world. My name is Patrick L. Young. The IPO-VID live stream, Series 4, Episode 5, or what we might call Episode 23, starts here. Now, royal news is not normally a major event for the Exchange Invest or indeed the IPO-VID team, but we clearly wish His Royal Highness the Duke of Edinburgh all the very best for a full recovery. At the same time, we enjoy looking at the broad brush of history, to which end we echo a long-term perspective on the state of the House of Saxe-Coburg-Gotha, who were more recently renamed Windsor. In one sentence to surmise recent events, I think it is fair to say that in the eyes of the most ardent royalists, rehabilitation of Wallace Simpson has had its best week in decades. Meanwhile, in Paris, where the pretenders to the French throne live in the relative security of some fine chateau, French bankers gave euro clearing the ultimate shrug this week, telling government folks that if they want to prize the Eurozone swap clearing business out of London, then legislation is the only answer. This is, of course, where the only answer could be deemed strictly at odds with prevailing international treaties at, say, World Trade Organization level et al. Media hysteria that Perfidious Albion is about to be destroyed. Now, where have we heard that before during the course of the past 5 years? This was tantamount to actually a first sign of continental surrender. The realpolitik is that the French bankers know voluntary moves won't work, so they have pushed for legislation, thus elegantly moving the counterparty risk off their balance sheet. So far, so very swaps, so very central counterparty clearing. Any enforcement of such legislation would drive a coach and horses through international trade agreements, creating a perfect storm for China, amongst others, to keep their currencies non-fungible on an open market basis, precisely because the EU are giving themselves a Canute level of currency control, micromanagement which runs against the gamut of everything the United States of America permitted, while enabling their dollar hegemony through openness. Of Eurodollars, I expect we'll hear more in a moment when we get to our guest, but in the meantime, the French bankers' gauntlet was not aimed at London, but rather it was thrown at the feet of continental governments. The French Bankers Association is telling us what we knew. Voluntary pressure won't work, as bankers are not going to split their collateral pools and risk more balance sheet nightmares, especially not in the Eurozone. In media news this week, the United Kingdom's DMGT, which owns the Daily Mail, has bought the New Scientist magazine. Media lovers are now wondering, can we expect a bevy of peer-reviewed hemline articles and studies on the impact of bikinis on research in esoteric fields, all carried out with a new look website, including one of those clickbait-centric sidebars of shame where we can catch up on gossips about these scientific communities. At least adding a few reality TV stars to peer review panels might add a touch of bling to the scientific process. Now, all this news and more, much more, actually, the demise of the Borsa Istanbul CEO, amongst many during the course of this week, have already been covered in greater detail in Exchange Invest Daily, the unique newsletter of the Bourse business. Send us an email or hit me up on whatever social media you're looking at here, Patrick L. Young. You'll be able to find us and indeed get in contact. We'll be delighted to open up the possibility of your liquidity pool of information being hugely embellished by understanding the exchange business every day. Meanwhile, ladies and gentlemen, let me just say, please give us a quick like for this show, share with us on social media, and ask us a question, because we have a magnificent show today. Our guest is Daniel Hodson. We're on the topic of the City United, a new Brexit chapter for London. As a leading figure in the promotion of Brexit in the City of London, Professor Daniel Hodson is a chairman of the newly launched City United project. As chairman, he's promoting a unified view of the opportunities as well as the world's largest and most cosmopolitan financial centre's opportunity to recalibrate, to take advantage of Britain's very exciting post-EU future. A future, of course, which we first delved into just a few weeks ago with Barney Reynolds in a magnificent IPO-VID, which you can still catch on YouTube, Facebook and LinkedIn to this day. Anyway, Daniel was formerly the chief executive of LIFFE at that point in time, the beating heart of financial futures in the City of London. He's been deputy CEO of the Nationwide Building Society and held many other major corporate positions aside. So therefore, he straddles an interesting position as being both a man of finance and a man of conventional business. He was the Gresham Professor of Commerce, and indeed, he's been involved in even running a public marketing services company, which was sold ultimately onto an agency many moons ago. He is the vice chairman of the Independent Business Network and has been chairing the City for Britain, in addition to launching just recently the City United project. Daniel, good evening. It is a joy to welcome our first Mercer, because I believe you are the first Mercer that we've had from the Worshipful Company on this show. Greetings and good evening. How are you and where are you in the world this evening?
Well, thank you very much indeed for having me. I'm looking forward to this evening very much indeed. I'm actually sitting in Arundel in West Sussex. I'm sitting in a house which was built by someone who was possibly not a mercer, but a great merchant. Arundel used to be a river port, the entry from the south coast of Sussex, going all the way up to London. There was a canal system in those days, which was broken up by the railways, very sadly. So anyway, I'm the fortunate possessor of this house. And I'm here simply because, of course, we are still in somewhat lockdown circumstances. And so most of my business life is conducted from the room in which you see me sitting.
Well, it's a magnificent room, and I must say, having been to Arundel, it's an absolutely divine place altogether. Wonderful. Some magnificent houses in the general district altogether. Just let me break off actually for a minute to say thank you very much, Chris Messina, the man who was our very first guest on this show. He's pointing out that the United Kingdom has flourished under German royal rule, despite minor carping from disaffected youngsters. No idea what you could be referring to this week, obviously, Chris, but it's always good to hear from you. Thank you very much for your comments. Lovely to have you engaging. And indeed, if you've got a question for Daniel, ask away. We're delighted to hear from you this evening. Anybody else, go right ahead. So, Daniel, tell us a little bit about how you managed to get to be in charge of the City United project and driving it forward.
Well, I suppose this journey started about 10 years ago when I worked with a group of people who really wanted to get the whole issue of whether or not Britain should stay in the EU out of their systems. This was a non-partisan institution called the Brexit Pledge. And it was supported by both Leavers and Remainers. Of course, on both sides thought they were going to win the argument. In the end, the Leavers won the argument, and we left recently, of course, finally. And since then, what I've been doing is working in the city to try to bring Remainers and Leavers again together to provide the best possible opportunity for what you describe quite rightly as the world's leading financial centre. It's been quite a journey. And in the run-up to our final leaving and the agreement for trade, which was negotiated at the end of last year, we came to the conclusion that the final piece which needed to be put together was in the area of financial services. And financial services, of course, are absolutely key, a premier industry for Britain. But the problem that we saw was that the promotion of the City and UK financial services was not perhaps as coordinated as it might be. There were a lot of very sound and strong voices, notably, for instance, Andrew Bailey, the governor of the Bank of England. But there needed to be a more positive message, a message which emphasized the opportunities, the international opportunities, the sort of things which market practitioners would understand needed to be put across on a broader basis. And that's really what we've set about doing since we launched a month ago. Our reception has been really very surprising. People say, we so agree with you. We feel that more needs to be said on the positive side. We need to be ringing more bells. We need to be thinking about the future and not worrying about what might have happened in the past.
And it's wonderful because I think you're absolutely right. I mean, a couple of weeks ago, we had Barnabas Reynolds on here, and I mean, he's a great Brexit thinker, and you've done work with him as well. And I was talking about the idea that it's time for prodigal son repo. I mean, everybody, it doesn't matter where you voted, what you thought, or where you were during the course of the 23rd of June 2016, or indeed all the way until the 31st of December last year. But the truth is now we've all got to move forward. We've got to embrace Brexit because it is the reality and the law of the land. And the only way to move forward is going to be by trying to find the best possible opportunities from it.
I think that's right. I mean, I think in fairness to the City and Financial Services, the nature of the industry is that people forget about the losses they made yesterday and start thinking about the profits they're going to make tomorrow. And so I think the city was a great deal quicker at adapting than people actually realize in the general world. Certainly, I was chairman of a very successful international boutique insurance broker, and we had already set up our structure, regardless of the outcome of the Brexit negotiations. And I think the fact that things are moving forward fairly seamlessly already, and that not many people have actually departed from the city, whereas we're told 1,000 firms have asked to come in, the lessons were very quickly learned, and people set out to make the future and actually to deal with the uncertainties, which are now hopefully diminishing in size.
Yes, well, it's very interesting. I mean, obviously, if you look at it, arguably the biggest area of uncertainty that is left in the economy at the moment is predominantly in the business of financial services.
Yes, I think that's probably true. Certainly, the one area where there is still a considerable negotiation perhaps to be had with the European Union, it was said, was in financial services, and there is an MOU in the course of negotiation. I think that raises the very interesting issue of what, let's say, a month or two ago was considered to be a major issue, which was why is it that we're not pushing bargaining for equivalence with the EU? I think the realization that EU equivalence is a political decision. It's a decision which can be taken away overnight and is probably, therefore, hardly worth the paper it's written on, has meant that people have started to think much more broadly about the opportunities which spring from the attitude the EU has taken. Now, you referred to, for instance, the fact that the markets, the internal markets of the European Union, are beginning to build walls. Yes, they are. They're becoming walled markets, and walled markets give opportunity, open any comers are welcome markets outside. And you referred to the euro-dollar market. The euro-dollar market was part of exactly that, was where Regulation Q back in the 60s increased the cost of deposit taking onshore, wholesale deposit to American banks. So they switched their deposit taking to London. And the bank that I then worked for, which was called Chase Manhattan then, now JP Morgan Chase, had 50% of its wholesale deposits in London. That opportunity exists across the board in both cash securities and derivatives in London, a parallel market, just as one example of something which we should be exploiting and are beginning to, for instance, dark pools and block trading and so on offshore is going on in EU securities based here in London. The market is taking place here in London.
I think that's a very good point. And actually, I mean, I used to be a director of LiquidNet at the time when it was the leading block pool trading organization in Europe. And certainly the removal of the double volume cap, which is incredibly arcane, is nothing but a great boon for the City of London, because it was actually a very, very silly piece of rule which came out of the worst of trialogue in the European Parliament, where they really make the usual late night drinking decisions over what they're going to be trying to do and decide. I couldn't agree with you more. And in fact, thank you very much. I'm not sure who that is on LinkedIn, but they're saying great insight from Daniel. I totally agree. And we've got a lot more time to get insights. If you'd like to ask a question, now is the time, ladies and gentlemen. Just drop us, well, also drop us a little love, a little heart at the bottom of social media, and then ask a question to Daniel. And indeed, speaking of which, Christopher Messina coming to us today from sunny Florida. Chris, it's lovely to hear from you once again. So Daniel, do you think that the shock of Brexit will reinvigorate the appetite for innovation in the city? Sadly, London in recent years has fallen into a trap of let's go third, which means that real innovation doesn't happen.
Of course I do. And I think that uh, the leading position that, for instance, the British fintech industry has globally is just an example of fintech is a very important element of financial services these days. And so I'm absolutely certain that's going to be the case. The parallel markets I've been talking about, I think it's certainly true that there's some work to be done in terms of the appeal of the London stock market beyond emerging markets, more high growth areas. But even last week, as you probably know, Lord Hill produced the listing review with all sorts of very interesting ideas in it, which the adoption of SPACs, dual pricing, and so on. So I think that certainly the London Stock Exchange and the Stock Exchange in London are going to be far more attractive as a result. Is innovation going to be a key? Yes, I think it is. People are not going away from London. We learned today that nobody's moving to Frankfurt, no one English speaking anyway, because all the English speaking schools are empty. And I believe that this enormous complex, this mass of services, of markets, multi-product, multi-currency, and the vast number of people work there, the decision makers, will stay in London and more will be attracted. And I think that is absolute. And actually, just one final anecdote. I think that the greatest example of moving a market was the Swedish equity and stock option market, which moved almost instantly at the end of the 80s to London when they imposed a financial transaction tax. Be warned, don't impose a financial transaction tax in the EU. Although I still see that that's very much on the cards, another opportunity for London.
Very interesting that you raise financial transaction taxes, Daniel. That's quite interesting altogether. I just want to say, actually, thank you very much, Mark Wheatley. It's just come to, we've got a slight latency in the LinkedIn feed. We really appreciate your input. That's Mark Wheatley, who is a councillor on the Corporation of London, the City of London's august body. So therefore, we've got a fabulous soiree of senior figures talking to each other from the Corporation of London, and good grief, Daniel is in such demand, his telephone's ringing at all hours of the day and night. I think he's got several telephones in front of him at the moment. Now, we've got a great question come in from Chris Pryor-Williard, speaking of, well, legends in the City of London. Chris, it's great to hear from you this evening. Chris Pryor-Williard, we need a flagship for the city to rally to and enable them to develop their collective innovation skills. How about a London-based European mercantile exchange?
Well, a little bit of history there. I'm a Mercer, as you said, and I'm also a former Gresham professor. The Royal Exchange started in London in competition with similar bourses in Amsterdam and on the continent in the 16th century. And that was, of course, the first element, the real bringing together of London markets. I think in these days, it's more difficult to do that sort of thing, to create an institution, because so much is done digitally. But what I do think that it's time that there was a more coordinated body looking after the promotion and setting out the opportunities in London. There are a number of individual organizations within the establishment who have a role here, but their roles are currently understated. I'm thinking of the Lord Mayor, the Corporation of London, their spokesperson, the City UK. I'm thinking of the great trade associations, the regulators, the government, the Bank of England. I have a vision, perhaps, of a city cabinet under a chairman, an independent chairman, which could perform this kind of thing and could actually work together to collaborate to do the sort of job that you're talking about. Everything's a bit free and disjointed at the moment, and it does need putting together. And I ran LIFFE. There was a lot more that went into bringing LIFFE, the London Stock Exchange, the big banks, the regulators together on a regular basis and working together, going overseas together, that sort of thing. I'm afraid that that doesn't really happen to the extent that it should. And that's a great shame. It's a real opportunity, and we should start looking at that. So I think I'm with you in general terms. I think my ideas overlap with yours. I'm not sure another Royal Exchange is quite the answer, although that's a wonderful building, and the City Corporation receives the benefit of one half of it now, and the Mercers Company the other, and all that goes on for that.
But it's a fascinating idea, and certainly it's a topic for discussion, I would have thought, in the many wonderful livery halls of the city when we can get back into the city and enjoy those many facilities, Daniel. We've got a lot of questions coming in this evening. It's fantastic. Thank you very much, Chris Pryor-Williard. If you want to add something, do come back. Thanks again to Mark Weekly. Thanks to Chris Messina so far. Here's a fascinating question just come in from Martin Watkins, amongst other things, I do believe, a member of the Court of the Worshipful Company of Bankers. If I don't mention all your livery companies as you're asking questions this evening, ladies and gentlemen, don't worry, feel free to flag them. Good evening, Daniel. What advice would you offer the Bank of England in respect of central bank digital currencies?
Well, you know, I'm the sort of person who doesn't believe in answering a question unless you think that you can get a decent answer to it. So I'm not going to quite duck it, but I am going to say that I think digital currencies are a real issue here. They really are a real issue. And I think that the controlling of them in some way is a massive task for the whole global financial stability of financial markets. We know, for instance, that looking for alternative investments in difficult times can lead and still does lead to investment, to the rise in the price of gold, for instance. Digital currencies are something else altogether. And the other problem you have is something which I should refer back to a remark I made earlier, and that is governments tend to underestimate the massive power, the trillion dollar power of financial markets and their ability to move everywhere, to move business instantly, as I gave a couple of examples, instantly offshore, at a whim almost. And so I think what you've identified is a very important issue. But I'm afraid that from my position, I can't ask her any advice, except to say, for heaven's sake, recognize the risk, work together with your colleagues across the globe, and let's try and create some kind of structure which has a decent charge of managing this extremely volatile creature.
Thank you very much, Martin Watkins. Very thought-provoking answer there from Daniel. And I suppose one of the things, Daniel, just building on that, is the great news is that, of course, these days, the City of London entirely has its own hegemony back. So therefore, it has its seat at the table at every one of these global negotiations, where previously it could be somewhat subjugated to the view of the EU 27 plus the UK.
Well, we never lost our seats. They come by virtue of our right. But of course, you're absolutely right. And one of the things that I think we should be looking at is working with other great financial centers to set up partnerships, and creating above that and working within the World Trade Organization where necessary, creating a global regulatory financial structure which reflects a more balanced regulatory environment than we've been enjoying, if that's the right word, when we were in the EU. I think that many people believe that it's become over-prescriptive, it's become disproportionate, and of course there is another problem which I think your previous guest Barney Reynolds referred to, which is the problem of fundamental law as opposed to common law, which provides certainty in terms of understanding how regulation will apply. So I think that there's a massive opportunity here for us to continue to build on our global regulatory leadership, as exemplified by what you just said, and work together, but literally to create a framework which works for the benefit of all the market and work in partnership with those markets.
I think that's fascinating altogether, and indeed, We can see that not just in the Anglosphere. You use a phrase which is beloved of one of your special advisors, Lord Hannan, formerly Daniel Hannan, the MEP, but also indeed the opportunities around the world, to which end I see we have a magnificent second, a follow-up question from Chris Pryor-Williard. Hello again, Chris. It's great to have you in the show. And, well, that's a very interesting question. The natural linkages between Zurich and London. Is something tangible happening here?
Oh, I think yes. I mean, I think that you'll find links of this kind with know that the share trading between the two centres has now opened up. I see financial service partnerships with, for instance, Dubai and extending farther east. Certainly, when I was at LIFFE, we had very successful partnerships with individual exchanges in Tokyo, Singapore, and in Chicago and in New York. So I think there's plenty of scope for this. I don't think we necessarily need to sort of say, shh, it's just between us and the Swiss. But I do think that's a working example of what can be done. And I think both sides are grateful that they've got this opportunity, because it just demonstrates what's out there for the future.
Well, certainly it's a very strong possibility, bringing together the financial centres in Geneva, Zurich, and also Lugano, amongst others. It's quite intriguing altogether. I'm terribly sorry, ladies and gentlemen, we are having a little bit of lag. Sometimes I'm aware of that, and I'm seeing some notes from the producer who's saying it must be a European Union Wi-Fi provider. Well, anyway, that's quite amusing aside. I'm sure they're not trying to censor our discussion, are they? Anyway, Daniel, let's take it back a step for a moment. Tell us a little bit more about some of the people who are involved with the City United, because you do have a spectacular role of advisors and other board members you've already made public.
Well, you're kind to ask that. Well, first, we've managed to put together a really good advisory board, many politicians. You mentioned Daniel Hannan. We have Norman Lamont, former Chancellor of the Exchequer, very leading personality there, and several other very important political people who are supporting us. I'm working with practitioners. We are having contributions from people like Barney Reynolds, who you saw, from Gerald Lyons, Danny Corrigan, some of you know possibly, who had a great CME career and is still very much in the exchange market. A very fine young lawyer, Tom Bohills, who specializes in fintech. And he's providing that particular aspect of what we're doing. And we're also working with a long-standing organ called Brexit Facts for EU, who have been working very much on describing the opportunities from Brexit, and now working with us, building on that to describe the opportunities with the city. So that's the core. And we have an agenda which is identifying a number of generic issues that we think that we should be looking at, some of which I've described already. When I say generic issues, I mean the higher strategic issues, which I think are less clearly stated and less clearly understood, and indeed in their own way provide the sort of opportunities. So financial service centre partnerships, which I've just talked about, is one. Parallel markets is another. And there'll be others too, which will come up probably in the course of this conversation. But where I think we probably have less to say is what you might call the more granular sectoral concerns, where there is certainly going to be, if not a bonfire of regulation, certainly a reform of regulation. You can see that already happening with looking at and recommendations in relation to listings, which I just referred to, in relation to MiFID II for markets and banks, and also in relation to insurance, Solvency II particularly. So those sort of things, I think we've got excellent trade associations in London, which we'll be working with. But I think there, our role is not going to be so important as it is in terms of setting out top level alternatives and opportunities which we see out there. Some of which I've set out, and we can come to more as we go on.
Very interesting, Daniel. So you were talking therefore about this idea of a city cabinet. You're trying to advance some more, I suppose, holistic thinking about the financial markets rather than just the business of the city, as in the corporation?
Well, I think that what we have is a number of institutions, and important and historic institutions, with resources and standing. And the Lord Mayor is certainly one, the City Corporation is another. And in the past, of course, the Governor Bank of England was and still is a very important spokesman on behalf of the city. And then you have the other great private sector institutions, the heads of the banks and so on, and the trade association. And somehow, in a way, without making it a massive organization, I think there's an opportunity to bring these together, to work together, to collaborate, to make sure that sort of messages which I'm putting across here, and we're putting across in a modest way with very limited resources, are taken up. I think it's been very frustrating, Patrick, that the news has been dominated by, for instance, Amsterdam debacle, when, of course, we know that this was always going to happen. It's predicted to happen. It had to happen. On exchange, EU share trading had to move to the continent. But of course, the bulk of the derivatives and the what you might call off-exchange cash trading stayed in London. Some of it's in New York. So that sort of story has to be put out. And a very interesting story, which I just I saw today, and I've got a piece of paper here, which says, and I read to it, this year 13 firms have raised £4.3 billion in London, and it looks like being the biggest quarter ever for fundraising in London, for public fundraising, since 2006. Now, that's completely contrary to the opinion you might have formed if you were reading some of the great organs of the world in describing what's going on in London. This is turning into a success. It always was going to be, in our view, but it's time we got that message across and encourage people to start thinking positively and looking at those opportunities and planning for them.
Absolutely. And it's very interesting because, as you say, Daniel, a lot of the bad news stories have been endlessly recycled. I mean, the euro-denominated repo clearing business was bound to go to the Eurozone because it's a banking function. But at the same time, what we've seen is actually, I think the most ironic situation is nobody's bothering to pay attention to who the capital owners are of these stock trading platforms. The business is actually transferred to the Amsterdam arms of the same people who were previously trading in London, or possibly the Paris arm of Aquis that's based out of London. So we haven't seen such a shake-up there. And you're also right. I mean, the value add is very different because, I mean, if we look at something like swaps and clearing, which we're going to get on to in a minute, because I know, not that I'm suggesting you're absolutely au fait with the minutiae of the market today, but of course you did sit on the London Clearing House board for a while back in the day, I do believe. So we've got a great question come in. Speaking of people who used to work at LIFFE, actually, Jonathan Seymour. Good evening, Jonathan. Great to see you today. Just recently promoted in the Bloomberg Empire. Well done, Jonathan. Delighted to see that. Absolutely, entirely justified. Jonathan asks, to increase speed to market, is there an opportunity to develop fast-track regulatory approval processes for new financial products to trade and clear in London venues?
Well, I think that's a very interesting question. I think it's a very important question. And I think just stepping back a little bit, the same sort of issue, one of the criticisms that I've heard of the Hill listings review, which has been, generally speaking, pretty well received, is this is a long drawn out process. This isn't probably going to be resolved until the autumn. That's very disappointing. I know that you're talking about specific individual products here, I think, Jonathan, but I do agree. Yes, I think there is. I think that we need to look at ways of doing this in a much more efficient way. But as you will have learned if you attended Barney Reynolds' interview last month, the great thing about common law is predictability, and that's a huge asset when it comes to regulatory approval. You can get on and do things in the fairly certain knowledge that they're okay, without having to wait in a queue somewhere in Brussels or wherever to find out whether it's possible to do it. That sort of thing at least gives us an advantage there, but we do need to do this. And I think it's a very good question. I'm grateful to it because I think it's something that we actually need to take up within our organization and look at. We've got a list of issues like this, and that was certainly one of them. When Patrick makes his next few remarks, I shall write that down. Fast-track regulatory approval. Thank you.
I will get straight onto that. Therefore, make a few remarks. So that Jonathan, thank you for adding to the City United project's waiting list of future things they're looking at. Ladies and gentlemen, if you'd like to ask a question, if you'd like to make a comment, now is the time. We've got Daniel Hodson here from the City United project. He's the chairman who's founded and driving the whole project forward. Please do give us a like on social media, and indeed, of course, interact with Exchange Invest, the daily bulletin of the Bourse of Business, if you would like to support us commercially in some way, shape or form. So it's fascinating. Fast track permissions. I must say, there's one thing that you mentioned, which I thought was quite amusing. Yes, there's a situation in London where a lot of people are very stressed because the Hill Review is not going to be organised until the autumn. But at the same time, if you look at dear old ESMA, they've been trying to produce regulations for crowdfunding for the better part of a decade. And the last update was that having passed all the laws, having passed all the regulations, which are a dog's dinner, ultimately the final sets of regulations, they can now pretty confidently tell us ought to come by either, I think it's October of this year or January 2022. So therefore, the City of London already seems to be steaming ahead in terms of its productivity. And certainly Lord Hill's a man who can manage to organise things with remarkable alacrity, as we know from the Prosperity Conference at which we were both delegates several years ago. And we got a couple of excellent questions have come in. Clive Lambert. So, technical analyst extraordinary. It's good to hear from you this evening, Clive. How are you? So what he's asking is, why did the press do such a bad job of reporting on the London to Amsterdam stories? The city needs to make sure this sort of rubbish isn't put out there.
Well, of course, I have to say I agree with you. I think that actually the second part of that statement really goes to what I was saying. I think there's a real role here for promoting a much more positive message and actually, disparaging these stories. We pushed out stuff very clearly saying the Amsterdam debacle story is complete rubbish, but you still see it appearing. Dare I say, am I surprised? Perhaps because their readership is so largely in the continent of Europe. The FT tend to run these stories. I hate to mention that. Others do too. So to some extent, I think it's the nature of the organizations and where they stand, if you like, in the political and Brexit EU spectrum. But I think it's also a failure on our part to get across and start to get the right stories out there and make sure that the press do understand. One of the problems with financial services, though, is that it can get a bit technical. I'll give you a little anecdote. I wrote an article on a technical subject for a newspaper, and I tried to make it as untechnical as I possibly could. I ran it past everybody. I didn't quite get my wife to look at it because she's not a technical financial service person. But I thought to myself, will my wife understand it? And I think she jolly well would. However, when the sub-editor comes back to me and says, this is too technical, I'm afraid a lot of these topics are very technical. They're not so technical to you out there, but we have to do a better job. That's the bottom line. So I'm absolutely in agreement with it. And thank you for raising it. Another one, by the way, just which I referred to earlier, was this terrific démarche of people from London to the continent. Well, empty schools in Frankfurt, 5,000 people moving, not the 50,000 that, dare I say, and this has been one of the problems, the city corporation were predicting before the Brexit vote. And of course, there is that too, I suppose, which is that the city establishment will predominantly remain oriented. They halted, they've stopped, they've reversed from where they were, but I think they're still having difficulty in getting their headlights raised to look at the opportunities out there. And that is one of the problems that we're encountering.
I think those are both very good points, Daniel. And in fact, also, one of the things I'm always reminded of is the fact that you end up with these fascinating situations where the people who are filling in these surveys that they're asked by the Corporation of London or the consultancies are quite often the Brussels-bound representatives of the same banks and so on. So they're all going to be in the same way talking their own book. Now, an interesting discussion has broken out. I see Chris Messina intervening to Clive Lambert and saying, trying to control the press is like herding cats who are not only eating amphetamines, but are dancing on a hot plate.
What could you say?
Young household, actually, at the moment. Certainly the cat we were trying to get out of this TV studio before we started this evening. Daniel.
Well, what could you say? I mean, of course, it's very difficult. I mean, media relationships are important. We do our best. Social media doesn't cost anything like the sort of cost of trying to get proper stories into the media. But I'll tell you what I think. It's very interesting that when great decisions are made or they're forced on you, that people who took up positions, I think of appeasement before the Second World War, where the establishment was, I won't say to a man, but largely appeases. And on the 3rd of September, suddenly they all changed. And I think we're reaching a tipping point in relation to this saga now. A tipping point is beginning to happen. The good news is beginning to trickle through. The realization is, let's leave the past behind, let's move forward. And I do think it was an interesting point you made about a preparation for Brexit, which I related, Patrick, to a point I made earlier, which is all these firms set up as an insurance policy, you might say, operations on the continent. The insurance broker I worked for set up operations on the continent because they knew that there was likely to be the situation which arose, and they were absolutely able to cope with it. So the preparatory work was done, and the disaster that was predicted has not occurred.
Absolutely, the disaster has not occurred, and at all points in time, I think the public news has been muted. Just Clive Lambert is saying there, can we bring back the LIFFE floor? I miss it.
Oh, yes.
Well, I think the one thing we do miss is that convivial opportunity to meet. And that's something which I suppose we're trying in some way, although this is a little more bilateral, to do through the IPO-VID and actually, yes, harmonious trading in our time, as Chris Messina beautifully describes it. It's a great description altogether. Moving back, thank you. Sorry, go ahead, Daniel.
Well, I simply going to say, over my there is a picture of the live trading floor. Which I look at every morning when I come and sit down in my study here. So I'm constantly reminded of what a wonderful place it was, and it was wonderful. But times move on. I mean, the digital world is overtaking, and the sort of digital analog spectrum is gradually diminishing in terms of size as the digital world approaches the analog. The final analog creature is people like you and me, human beings, I suppose.
Well, I think it's also very interesting. I mean, just looking through all the people that have been engaging with us this evening, Daniel, and every single person in some way, shape or form was shaped by the floor trading business. And in fact, many of us had the joy and the pleasure and the honor of working on the live floor. And it was quite sensational. And in fact, next week's guest used to be a live floor trader, but we'll get to that after this bulletin. Obviously, we have two fantastic.
Can I forgive me interrupting? I just want to make a point, and that is, it's important that we've been talking about regulation a lot. It's important to recognize that LIFFE, certainly when I was there, was a self-regulating organization. I was a regulator. I was the regulator of the exchange, and I reported into the regulatory authority directly. I finessed the LIFFE board for that, and we knew everything about what went on in the markets. And we used to have a cottage industry of 2 or 3 people who worked with the people who were their opposite numbers in the SIB, as it mainly was, tell them what was going on. And I think that kept them aware of our marketplaces, and it gave them a sensitivity to our needs in the market and the risks too. Now, the reason why I think this is important is because I think that we need to reinvigorate or to create a different regulatory philosophy, not significantly changed, but maybe less prescription, make it more proportionate. The regulators in those days thought a lot about caveat emptor, the difference between wholesale and retail markets, all sorts of gradations there, which have been rather taken over by the one-size-fits-all approach that we've seen in recent times. There is an opportunity there. It will take a while to get that sort of message across, but I think it's going to be a very important part of the way in which regulation develops in the future. And we should be doing this, of course, in close collaboration with other major financial centres outside the UK.
I think those are fantastic points, Daniel. And actually, we have two magnificent questions coming in. The first one is from Councillor Mark Wheatley, who is a common councilman of the Corporation of London. Daniel, is another problem, we're going back to the media, is another problem that so many journalists and financial services, business, political leaders have spent years looking at this in regulatory terms rather than commercial, meaning that Brussels was the sun around which they orbited?
Thank you, Mark, who I know very well and respect and have worked with. He is a voice of reason, one of the many voices of reason, but a particularly committed voice of reason on the City Corporation, the Court of Common Council. This is a very interesting question, and I think that one of the things that we really do have to do is to make sure that the commercial side of, which is after all the business of business, becomes much more dominant. The regulatory side less. Thank you, Mark, for that. In a way, it enables me to say again that I think that regulation needs to take more view of the competitive nature of markets. And I think that, of course, we have become Brussels-centric. And of course, Patrick referred to the fact that inevitably the people in the compliance department, the trade associations, have all had, to a degree, a Brussels outlook. Because that's why they were hard. Many of them were hard, or the organization was put together at a time when there was no realistic chance, they thought, that we would be leaving the EU and we'd be out on our own like we are now. So I think there is a really important exercise in re-education. That's a long-term thing. One of the things which you would understand from your experience of working in the public sector and the political side of the public sector is that it takes a long time for these changes to happen. But they need happening, and they need to be driven by people like you in the corporation, and I imagine most of the people who are listening to this, because we represent the future, and we need to create a financial services industry which better resembles the sort of vision that we have, and not the one that we had and we're leaving behind.
Absolutely fabulous altogether. And in fact, we've got a great comment on that from Clive Lambert has just come in saying we may have that opportunity as the FCA and indeed the Bank of England now only has to listen to one country, arguably. That could speed things up.
I think that's right. I mean, I think it means that that we have the regulators, the legislators, and the practitioners all together in one place. You don't have to get into an organizational argument with 27 different entities. I mean, obviously, to a degree, we had a more important role there, particularly because of the importance of financial services. But you're absolutely right. There are all sorts of opportunities that are opening up here. And I believe that actually, I do believe that people like the Governor of the Bank of England and others who are beginning to speak out on these things are really picking this up. But it will take time, and it will take energy and drive. And we need to get the right messages out there so that we can set stakes in the ground, which people will aspire to, not just in London, but globally as well. Because frankly, London has always been successful, the global financial market. And as I said at the beginning of this discussion, the thing which set up London as it is today is the Eurodollar market, and there are going to be similar opportunities there. So I think that I agree with you. Again, much of what's been said here, I tend to agree with.
Thank you very much, Daniel. Thank you very much, Clive. And thank you in particular, Mark Wheatley, for that very prescient comment. Very, very interesting to hear, and opens an interesting line of debate around the media and media messaging. We got a super question changing slightly. You were talking about Solvency II a moment ago. Let's look at insurance. Martin Watkins, thank you very much for your second question of the evening. London has excelled at financial market innovation, so what would you think of Lloyd's of London transforming itself into an exchange group and for the city to optimise liquidity by arbitraging securities, derivatives and insurance regulations?
Well, that's a very interesting question. I think that we're in a situation where all bets are on. But I do think that you need to look at what markets look for. They're concerned with competitiveness, they're concerned with liquidity, they're concerned with depth, and the way in which they're provided. In the LIFFE days, of course, it was an open outcry trading floor. Stock exchange was only partly digitalized in those days. In those days, there was some money to be made out of exchange trading. We now know there isn't. The money is made outside there, it's made outside the exchanges. There are all sorts of opportunities here, but I think the most important thing is to provide a regulatory system which actually caters for the opportunity here. And I go back to what I said before. You're talking about a number of different alternative products. We have the opportunity to make sure that they are happening in London, properly and competitively regulated. Lloyd's of London transforming into an exchange group, I think I'd have to get outside this and work out exactly what you meant by that. But beyond that, of course, one of the problems with insurance is that it is a lot of it is a less commoditized activity than a lot of the markets outside insurance. But I do think that there are immense opportunities, yes. The main thing is for us to be able to create, as I say, and what we're working on, the City United project, is the generic framework which allows this to happen.
Excellent answer once again, Daniel. Let me just say, of course, one of the things I think we are talking about at the moment is this is the age of the exchange. So let me just give a quick plug to Victory or Death, my latest book on the topic, which explains why exchanges are, frankly, the driving force of e-commerce the world over. And that's why, therefore, in a Brexit world, it's so important that the City of London embraces it. And indeed, it's incredible when you look at how many exchanges there were in your heyday as CEO of LIFFE, when it was the absolute, the zenith of floor trading and really an incredible place in London at that point in time. You look at the number of exchanges there are now. Who would have thought that you would end up with twice as many exchanges and market platforms being based in the City of London compared to even the numbers that we had in the mid-1990s?
I think that's true. And that is a question of innovation. It's also a demonstration of the opportunities that digitalization has provided. And of course, it's also a demonstration of the power of fintech. And that, no doubt, we'll be having. I'm lucky enough to be here in 20 years. We may be having the same conversation 20 years on and past, and what's happened since. Certainly, it's true to say that I always felt when we were floor trading in LIFFE, although we had electronic systems built in and backup across the board, and they were very good. And we also had an out of hours electronic trading system, which was very successful. I always felt that the actual trading mechanism itself was merely electrons, and it would boil down to that in the end. And it would be the cheap end with a lot of fat opportunity for the participants outside the actual business of doing the deal.
It's interesting, and doing the deal is obviously something you've got as a forethought when you're talking about the whole idea of the business of business must become dominant in the City of London. So looking forward, I mean, you've mentioned this idea about trying to float some sort of a cabinet for the City of London. You've also been pushing towards the idea of trying to essentially organize better relations around the world and looking towards speaking to many of the other financial centres, large, small, and somewhere in the middle, for which the City of London can get together. In between the ideas that you've been given this evening by the likes of Jonathan Seymour, How are we going to see this agenda being advanced, Daniel? What is your plan to move things forward?
Well, we've not been long at this, and I think that the first thing we wanted to find out was whether there was going to be acceptance of what we did. Did we have a role to fulfill? And I think we've shown that in spades. So now, and this kind of session is extremely helpful at building up an agenda. It's clear that, as I said before, the generic issues, the sort of things I identified, and there are others too, like the regional opportunities. I mean, we talk mainly internationally, and I understand that to a mainly international audience. But there are terrific regional opportunities in finance as well. I mean, this is a massive industry, you know, in this country, and a very significant chunk of it employs people outside London. So there are all those things, and you're quite right. What are the deliverables? I think the deliverables, ultimate deliverable, is what we've said on the tin, which is when the City of London is identifying these things, identifying the opportunities, is actually marketing them, promoting them appropriately, is doing that in a coordinated and well thought through and balanced and stable way, and perhaps in the context of the sort of city cabinet that I've been talking about, then our job is done. And how long will that be? I don't know. It may be months, it may be longer. I believe that the City of London has the capability and the institutions, if it were to pull the strings quickly together, to do this in a relatively short time. And I hope for my own sake, perhaps, that they do. But I think one thing about this conversation to me is it does endorse, and particularly the sort of questions that have been asked, how there is a huge opportunity identified out there which is not currently being recognized, not being dealt with in an optimal way.
I think that's a very good point. And in fact, well, we've heard this suggestion by Chris Plyer-Williard this evening, and Chris was talking about the idea of some form of European mercantile exchange, perhaps. And you're very passionate as well. You've mentioned it twice this evening about the old euro-dollar market and how that came to be so dominant in London, etc. Parallel markets, it's a fascinating opportunity for the London City Financial Centre.
Yes, I think it is. I think the circumstances are absolutely right for them. And of course, they're already developing. I referred to the post-Amsterdam debacle, dark pools and block trading and so on, which is going on already. And there will be other opportunities too, which will arise as the EU, as it seems to be doing, continues to build these protectionist walls around its internal markets. We believe that they're regulatory possible. We believe that they have legal standing. Certainly that's been proved in the past. And I think that, and indeed, I have no doubt whatever, that the regulators will be able to deal with them. There will then be probably, and this will be interesting too, and there's already competition with New York, because some of the business which was formerly residing on the continent may flee to New York, and we shall have to take up our traditional competitive position with that centre. But I've no doubt whatever that we will continue to work well with them, as certainly my experience is that as a market, a run of a market and a regulator, that our relationship with our opposite numbers in the US are extremely good, and I've no doubt they continue to be, informally or formally.
Yes, sorry, go ahead.
No, please.
Well, no, I was just going to say, I mean, you talk about the relations with the United States of America, how good they are. And obviously, you used to run a powerhouse derivatives business in London. And I mentioned earlier, I was going to ask you about clearing, because I think it's very interesting what you're talking about international relations and the whole business of how there is this ongoing, I think, phony war about the movement of the euro clearing out of London.
Well, clearing is a complicated issue, and it's one of those things which journalists really have difficulty getting their mind around. But the basic issue is, of course, that clearing is multi-product and it's multi-currency. And at the heart of it is the netting process, which goes about margining, and the amount of margin you put up against a trade in an exchange. And the more complicated that is, and the more currencies and more products, the more the offset exists. And of course, the amount of margin which is put up determines how much capital is needed. So if you start to try to move part of that business out onto the continent, which happens to be denominated in euros, then you're going to increase the requirement for margins, which will increase the capital, both for the clearinghouses themselves, the CCHs, and also for the clearing members and those other people who are involved in the market. And that's going to have a negative effect. And it will tend to draw or keep the business outside the protected walled market. And so you can see, I mean, the clearing is massively complicated. But London's great advantage is its multi-currency, multi-product clearing situation. And it seems to me that although there'll be every effort to try to move as much possible over, that still the remainder will stay here or, as indeed some of it may, move to the US.
Daniel Hodson, multi-product, multifaceted, multi-dimensional. That describes not merely central counterparty clearing, but surely the last hour of discussion we've had, the City United, an incredible opportunity. It's a delight to see you chairing and driving forward the opportunity for unified markets, as we have a lovely comment from Martin Watkins, who surmises better than me. Thank you, Martin. As an international banker and an information technologist, it is wonderful to listen to a Mercer in outstanding form, assisted by a world trader, an outstanding IPO-VID. Many congratulations. Daniel, I want to say thank you very much for what has been a magnificent evening. It has been super to have so many great, interesting interventions. Thank you very much, Chris Messina, Councillor Mark Weekly, Chris Pryor-Williard, Jonathan Seymour. You've even added to Daniel's workload for when he leaves this call this evening. Fabulous to hear from Clive Lambert, amongst many of the old floor traders who've been watching this evening from the heydays of life. And thank you particularly for that final comment and the two excellent questions, Martin Watkins. Ladies and gentlemen, what have we learned today? Brexit Britain, as Daniel Hodson says, all bets are on. Looking at the future, no betting here. We've got two great speakers coming up in the course of the next 2 weeks. Another ex-live floor trader, Neil Crammond, is going to be coming up, Education, Bridging the Trader Gap, next week. And in 2 weeks' time, I'm delighted to be welcoming a very august guest, a former master of the worshipful company of world traders, no less, the Sheriff of the City of London, Professor Michael Manelli. Those are coming soon. It only remains for me, ladies and gentlemen, to offer you one tiny little thought on the whole business of Brexit and the future of the City of London. And it dates back actually to having lunch with Daniel after a Bergenstock conference. Oh, good grief, I think 20 several years ago it was, Daniel. And at that point in time, you were thinking about some sort of a reception to bring in the new millennium. As you were discussing that, your head of regulatory policy at the time had actually called up his opposite number at the Corporation of London. And this, ladies and gentlemen, you need to understand, is why the City of London is going to survive and going to profit in the future. For ladies and gentlemen, the discussion was, well, yes, we're thinking about doing something, you know, bringing in the new millennium, this, that, and the other. Oh, yes, that's an excellent thought, said the man at the Corporation of London. Do you know what? I tell you what, ring me back next week because I'll see if the corporation are planning anything for the same date. And do you know what? I'll have a check in the archives and I'll see what we did last time there was a new millennium. And ladies and gentlemen, financial centres that have a millennium and more of history, they aren't going to disappear soon. One little blot of Amsterdam stock trading is not going to take it away. And again, I repeat the mantra, everyone is welcome with the City United project. I believe, as Daniel has said, we want to see a Brexit profitable Britain. And finally, two wonderful questions. Thank you. Comments from our guests. First of all, Mark Weekly, what an absolutely correct comment to make. And not only a Mercer, but a Master Mercer too, I do believe, at the Gresham College, Professor of Finance. Are Mercers ever in any form other than outstanding? I certainly cannot think of it during the course of the last 700 years or so. And Chris Messina, thank you very much. You had the first word and you're going to have the last word. Well said, Patrick. And for the last time and next, ladies and gentlemen, IPO-VID will return soon. We're looking forward to having you back. Thank you very, very much once again, Daniel Hodson. It's been a super conversation. And finally, thank you to our production team, to Beata, to Ola, to Veronica, and everybody who worked on making this IPO-VID such a success. My name is Patrick L. Young. Catch you again next Tuesday, 7 p.m. Central European Time, 6 p.m. London time. Daniel Hodson, the City United. Thank you very much.
Thank you.